Ladies and gentlemen, good day and welcome to the Eldeco Housing Limited Q2 and H1FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Bhatt from EY Investor Relations. Thank you and over to you, Abhishek.
Thank you. Good day, everyone, and thank you for joining us on the call. Before we proceed to the call, let me remind you that today's discussion may contain forward-looking statements that may involve known and unknown risks, uncertainties, and other factors. It must be viewed in conjunction with a business risk that could cause the future results, performance, or argument to differ significantly from what is expressed and implied by such forward-looking statements. Please note, the results and presentation are available on the exchanges and on our company's website. Should you need any assistance to receive them, you can write us and we'll be happy to send them over. Today we have on the call the senior management of Eldeco Housing and Industries Limited, which is represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, Mr. Sanjay Agarwal, Group Vice President, Accounts and Taxation. We'll begin the call with the highlights of the quarter, followed by Q&A. Now I would like to hand over the call to Mr. Pankaj Bajaj for his opening remarks. Over to you, sir.
Thank you, Abhishek. Good afternoon, ladies and gentlemen. Welcome to our Q2 and H1 FY25 earnings call. We are pleased to report that the Lucknow real estate market continues to be strong, which is reflected in our operational metrics for the quarter. During the quarter, we have sustained the momentum of strong fresh booking that began last year, demonstrating the continued confidence of our customers in our projects and in the Eldeco brand. While a reported operational margin seem to have contracted, this is primarily due to the mix of projects in which revenue was recognized in this quarter. On the other hand, all the major operational metrics have witnessed improvement in the quarter. I'm happy to report that we have witnessed a growth of 193% year-on-year in the area booked, totaling to 156,335 square feet. The average price realization of rupees 6,500 per square foot of area booked was the highest in this quarter, primarily driven by the majority of bookings coming from our luxury Eldeco Trinity project. As a result of the higher area booked and higher per square foot realization, our booking value has increased by 316% compared to Q2 FY24, reaching rupees 103 crores in the quarter. Coming to project deliveries, we have successfully handed over about 61,000 square feet of area during the quarter compared to 38,000 square feet in Q2 of last year. Timely delivery remains a key focus for us. In addition to these operational highlights, we have marginally expanded our land bank in the quarter. We acquired an additional 3.84 acres of land on the periphery of our ongoing land aggregation efforts. With this acquisition, our total land aggregation for fresh township projects now stands at 65 acres. We are in the process of applying for approval for about 45 acres of this land and are optimistic about getting the approvals early and launching the project early next year. The revenue potential of this project should be more than rupees 600 crores, could be closer to 800 crores, but that depends on the final plan which gets approved. Moving on to our financial performance, the consolidated total income was rupees 36.4 crores in Q2 FY25 compared to rupees 18.7 crores in Q2 FY24, a growth of 95% year-on-year. Total income in H1 FY25 stood at rupees 68 crores as against rupees 46.2 crores in H1 24, a growth of 47% year-on-year. The consolidated EBITDA for the quarter was rupees 7.9 crores with an EBITDA margin of 21.8%. EBITDA for H125 was 19.7 crores with an EBITDA margin of 29%. The company's consolidated profit after tax stood at rupees 4.5 crores in Q2FY25 as compared to rupees 6.4 crores in Q2FY24. Net profit during H1FY25 stood at rupees 12.5 crores as against rupees 14 crores in H124. So with this brief review, we can open the floor to questions if there are any.
Thank you, sir. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question on the line of Bharat from Fairview Capital. Please go ahead.
Hi, Pankaj. I hope I'm audible.
Yes, you are, please.
Yeah. First of all, sir, congratulations for a strong uptick in the pre-sales number. Couple of questions from my side. So first, like in terms, we know we are majorly operating from the Lucknow market, but with the competition which is getting more aggressive and a lot of new players are trying to enter into the market, and with the limited availability of land which is there, so what's your viewpoint currently? Like, are we exploring any particular land bank outside Lucknow, or our focus remains to accumulate and be there in and around Lucknow market only?
So right now we are in Lucknow market only, and the issue of land banks and future projects which we had been discussing in the previous calls, that's more or less resolved. If you look at our special land bank acquisition and also the projects in pipeline, and both these things are given in our investor presentation which has been uploaded. I think we have enough runway for growth in Lucknow for the next 3 years. I mean, if you want the help with those numbers, I can take you through those numbers. Next 3 to 4 years, it's looking quite good for us in Lucknow.
And so, like you have mentioned in your previous calls that you want to stick with a pre-sales benchmark of near about 400 odd crores. So,
yeah.
Like with the kind of acquisitions which we have done and with the new projects which are coming in, so are we confident that we will be able to deliver?
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवलं आहे.
Hello.
Hello, yeah, I think I got put on hold. So, can you repeat the question?
Yes, sir. So in our previous calls, when we have mentioned that our pre-sales benchmark will remain as close to 400 crores or above. So with the kind of acquisitions which we have done and with the new projects which are coming in, so do you expect that the pre-sales numbers is likely to continue over the 400 crores over the next 3 years?
Yes, okay. I think I'll take you through the numbers, and this is all forward looking. So just please discount that part. It's all estimates and it depends on a number of things. If you look at our unsold area, we have disclosed that number in our presentation. It's about 10 lakh square feet. We have about 6.5 lakh square feet of fresh projects which are under approvals. So that makes it 16 lakh square feet. Plus we have more land aggregation we've done. I expected the plans are still under preparation. I expect that to yield about at least 2 million square feet of fresh inventory, if not more. So it will probably be much more than that, but let's take it as 2 million. So that makes it 3.6 million square feet of unsold area. Our realization per square foot this quarter was 6,500 rupees a square foot. But let's just take it at 5,000 rupees because this quarter it was primarily Trinity. At 5,000 rupees, 36 lakh square feet translates to a sale of 1,800 crores. And that is for the unsold area. We also have about 800 crores of area which we have already sold, but we have not yet delivered. So that's also going to be recognized. So 1,800 plus 800. So that makes it 2,600 crores. And this all has to be done in the next 4-5 years. So you can do your own math. So 2,500 crores of inventory over the next 4-5 years.
Right.
So I hope that answers your question.
Yeah, sir. Perfectly.
Yeah.
Sir, with respect to Trinity, which is one of our first projects out there in the luxury space, I believe we have been able to sold around 30% of the overall unit area within the 4 months of our launch. So while it's understandable that it's a higher price ticket size inventory which we are carrying, but in terms of our positioning in the Lucknow market in a region where a lot of new projects with respect to premium side are coming up, so in your understanding, how do you rate the overall scenario with respect to the luxury bookings and and is there any kind of a project similar to what Trinity has offered to us? Is there in the pipeline?
No, in the Eldeco portfolio?
Right.
No, so Trinity is an outlier in the Eldeco portfolio. That's the only luxury project we have at the moment. And it's not that just because we launched our luxury project, we have pivoted to the luxury segment completely. Most of our product continues to be in the upper middle premium kind of segment, not luxury. So Trinity is the only luxury one. And we are happy with the kind of sales we got. And mind you, the construction is still at basement stage. So to get that kind of sale at basement stage is very hard.
Right. And sir, in terms of the overall demand scenario in this particular segment of luxury housing, so how do you rate the overall scenario? I think it's there in the Gomti Nagar area. So across, like a lot of new players are there, which are coming up with their own higher end luxury kind of a project.
It's not really relevant. It's not really relevant for us. No? We are there only in Trinity. We are already sold out 30%. We are at basement stage. By the time the structure comes up, we will be like majorly sold out. So luxury is an important segment, and this area, particularly geographically, is coming up very well in Lucknow. But let's be mindful of the fact that constitutes only 10% or 15% of the total market. Our majority, if we have to do the kind of numbers I just shared with you, it cannot come from luxury in Lucknow.
Sir, our last question from my side. So in the presentation, it's been mentioned that we are coming up with a project on the New Jail Road, I think, which is somewhere ahead of the Kishanpur. So while no doubt infrastructure is improving, but given the locality of our project, which is somewhere outskirts on the city side, so like in terms of the target audience which will be there for our project, and how do you foresee the overall level of pricing playing out with respect to both Lucknow and the projects which are there in pipeline for us?
So we only have to look back at our own track record. If you've been looking at Eldeco's recent launches, there was a project called Eldeco Regalia, which was on the outskirts. It was off IM Road. Then there is Eldeco Imperia, which is a similar size project. All these projects have done so well for us, and we have typically been launching at a premium of about 30 to 40% of adjacent developments. So because of the whole premises and the whole premise of our business model is that there is a huge demand, met demand of quality housing. People are willing to pay a premium. They can travel a little far, but if you can give them quality housing, gated township with full facilities and of amenities which are compared well with anywhere else in the country, they will pay you a premium, and that is what is playing out. If you look at our profitability numbers in Imperia and Regalia, they are more than any luxury group housing project, by the way. So that's the same thing we are going to follow in Jail Road. Even that's why traditionally the EBITDA margins in Eldeco housing have been much more than most listed real estate companies. And the reason for that is that we give superior offering at maybe slightly off location, but the customers actually like that because they want a reasonably priced product, but with fully loaded. That's the consumer behavior at the moment.
Sure, sir. That answers my question. Thank you so much, sir.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Gunit Singh from Corner Cycle PMS. Please go ahead.
Hi, sir. Thank you for this opportunity. So, sir, in this financial year, we have completed and launched about 4 to 5 projects. out of which, Twin Tower and this other project, the phase 1 of
Imperial.
Yes, Imperial phase 1, which is about a total saleable area of, I think, 450,000 square feet, if I'm not wrong.
3 lakhs.
So I just want
3 lakhs 5,000. Yeah, okay. But the two of them put together are 450,000. Yeah.
So overall, 450,000 square feet potential, real estate we have completed in this year. So, sir, I just would like to understand out of this, what percentage have we already handed over, and what percentage of this have we already handed over to the customers?
Twin Tower possessions have not started, so nothing has been handed over there. And in Imperial phase 1, I would not have the number. If anybody, one of my colleagues can offer that information, if you have it. Kapil, do you have it?
Sorry, sir, I didn't get you.
So Imperial, I don't have that number. I would guess that it would be about 20-25% which has been handed over at the moment. But we can get back to you on the exact number. Twin Tower, nothing has been handed over at the moment.
And sir, for Shaurya, Arcade and Saksham, have all of them been handed over?
We'll have to get back to you after this call because I don't have this granular detail on handing over percentage of each project.
All right, so I believe revenue are recognized only once handing over takes place. So, should we expect H2 to be, significantly higher in terms of the revenue recognized because of handing over of these projects?
I would guess so, yeah.
All right. So secondly, our EBITDA margins in this quarter have fallen significantly. So I just want to understand the reason for that, the increase in the cost of materials consumed in this quarter, as well as if we look at the other expenses, they have probably doubled year on year from about 3.8 CR to about 6.3 CR in this quarter. So can you please help me explain why have we seen a fall in EBITDA margin this quarter?
So I already mentioned it in my opening remarks. That's because of the kind of project which got recognized for revenue, which we briefly discussed. It is Imperial phase 1. Imperial phase 1 has a lower EBITDA margin for the company. I'll explain that in a bit why that is the case. So traditionally we've been working at about 40% EBITDA margin, and the Imperial phase 1 I think is barely about 16%, and that is what majorly got recognized this quarter, and so that has pulled it down. Now the reason for so Imperial is a large project. It's about 47 acres, out of which 17 acres is phase 1, which is in our books is a separate project, and there it's a separate project, and about 30 acres is phase 2, which is a separate project. Now, when we designed phase 1, we always knew that phase 2 is going to come. So we designed it in such a way that many of the cost items, which are basically common to the whole development, are all loaded onto phase 1. So the entrance gate, the club, the wide entrance road, and even the parks are all in phase 1. So that has brought down the EBITDA margin there. But in phase 2, our EBITDA margin is nearly 50% or 45%. So the weighted average EBITDA margin of the two projects is back to 40-45%. So there is no cause to worry. But of course, phase 1 has got recognized this quarter, so it has pulled down the reported EBITDA margin. So that is all there is to it. It's not a long-term trend, and it's nothing to worry about. Our business model remains the same. If in our mind we treat both the projects as same, then nothing changes. But it's just that in reporting and in our books, the two are separate. So, and the one which has got recognized this quarter has a lower margin. So does that answer your question?
Yeah, it does. So
Yeah.
basically, for the current financial year, we should expect a bit lower margins as compared to our
slightly lower because the Imperial phase 1 is getting recognized, but next year or whenever Imperial 2 gets recognized, you will see a huge jump. That also will not be it will be a normal thing. Now, unfortunately, that is how real estate revenue recognition works. So it changes from quarter to quarter. But over a 4-year period, our EBITDA margins remain the same, weighted average.
Right. And the margin for Twin Towers would be just as a historical.
Similar, yeah, the historical number. Yeah.
All right, sir. Thank you very much. Wish you all the best. I'll get back in the question queue.
Thank you. We have the next question from the line of Priyank Gupta from Guardian Advisors. Please go ahead.
Good afternoon. So Pankaj, we would like to have your quick comment on in this quarter and quarter going forward, and particularly Lucknow.
Priyank, you broke. I couldn't hear you. Can you repeat?
Pankaj, I said we would like to have your comment on the quarter gone by for the real estate market on the whole for the country and particularly Lucknow.
So on the whole, there are definite signs of slowing down, and I think that is true not only for real estate, that is true for the entire economic scenario in the country. I mean, you can see the first signs, the data was out yesterday, inflation is higher, and cars are not selling as well as they used to. Even on the ground, the inquiries, if 2 quarters ago, they were benchmarked at 100, right now they're at, say, 80 or 75. So probably that has got to do with the sudden increase of prices, or maybe cost of living has gone up. So overall, things are a little slower. That is why in one of the earlier questions, one of the participants was asking me about luxury housing. We are not so sold on as a strategy. We are not pivoted to luxury housing because we know that in the long run, upper middle class, premium housing is what is sustainable. So the impact of the slowing down, we don't really feel much in our numbers and in Eldeco's numbers, because our product is such that it will continue to sell at a decent pace. Luxury housing may face some challenges. Within that Trinity, I don't expect it to face much challenges because of the unique position of the project geographically and how it has been positioned in the local market, and it is generally luxury and it addresses a need there. So overall, I would say things are a little slower if you look at Gurgaon, if you look at other markets. But if your project is fundamentally good and it addresses a need, there is nothing to worry. So, and the same goes for Lucknow. The fresh land aggregations that we have done, we are very confident of good response from the market and also decent margins, because we have a tried and tested model and the template for that is Imperia and Regalia. The projects get finished in 3 to 4 years and give us decent margins. People are willing to travel a bit, but they want fully loaded residential experience and at a decent price. So I'm not worried on that count. But generally, yes, the kind of runaway kind of sales which are happening in the last quarter, we have seen a slowdown there.
And do you think with this slowed run rate, our unsold inventory might take a little longer than what we would have expected? As in your earlier comment, you were saying that it's enough for probably next 3-4 years.
I can't. So that 3-4 years remains unchanged. It could be. It could move a quarter or so or 2 years. So 4 years is not going to become 8 years. That's not the kind of assessment that I'm thinking. Obviously, things move a little. If the markets are also hot, if you're giving a nice product, but the markets are also very hot, it helps. And if the markets are a little cool, it may take a quarter or 2 quarters longer than what we have anticipated, but not beyond that, because we are very confident of our product and the design and the pricing. That combination is a sweet spot. And we kind of, when we design projects, we try to make it as recession-proof as possible. Nothing can be recession-proof, but as recession-proof as possible. So we're not worried. What could have taken, say, 20 quarters or 16 quarters may take 18 quarters.
Got it. Thank you so much. Best wishes to the whole team. Thank you.
Thank you. We got the next question from the line of Kunal from Fairview Capital. Please go ahead.
Hello, am I audible?
Yes, Kunal.
Okay. You talked about the industry scenario for the country as a whole, and can you also talk about what sort of unsold inventory there is in Lucknow, and is there any any hints of a supply-demand mismatch and any slowdown on the pricing front?
So in Lucknow, the kind of product that we are in, I don't see any demand supply mismatch. In fact, there is much more demand than there is supply. It is independent housing on the outskirts of the city at a decent price of 1 crore, 1.2 crore ticket size. There could be glut possibly in the luxury segment. After Trinity, a number of projects have been launched in this particular area where Trinity is, in the price range of rupees 8,000 to 10,000 rupees a square foot, which in Lucknow could face some resistance. But as I said, we are not majorly present in that segment. Trinity constitutes only 15% of our portfolio. So the 85% of our portfolio, the demand supply mismatch, if any, is in favor of demand. I mean, there is more demand than there is supply.
And do you think that for Lucknow, the demand in real estate is driven more by end users or by investors?
It's end users.
For the entire market and for users.
It's either end users or it is what we call long-term investors, end users. Some people tend to buy, there's a lot of inbound investment into Lucknow for, say, there's a businessman or a employed person in, say, Prayagraj or Varanasi or even up to from Bihar, and they would like to have a place in the long run in Lucknow. There's children are growing up. It's a nicer place. Medical facilities are better. Education is better. So they'll buy something, and by the time it gets finished, their family plans would have formed up and they would move in after 4 years or 5 years. So these are long-term investors. They could even resell at a later stage, but they are themselves not sure what they want to do it. But it's not, if investor is the breed that we are referring to when we talk about people who buy today, give about 10-20% advance, and 6 months they try to exit with a premium on that 20% advance. No, that market is not there at all in Lucknow. It's people who will pay the entire price of the product and they will take it over either for themselves or they'll give it out on rent, or majorly it's that.
And also going forward, do we expect to see more debt on the books of Eldeco, or
possibly yes, because we are tying up more land parcels. We think that it is entering a golden period of growth as the capital of UP. And if accessing capital, we don't want capital to constrain our growth. If we find opportunities, we may raise more debt. But whatever debt we raise, we will be, because the pace of sale and the collection in Lucknow is so fast, or at the project level, we like to repay it back in a couple of years from raising it.
Okay. And just one last question, sir. Are there any updates on a merger with the unlisted company?
No updates.
Okay. Thank you very much and have a good day.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Shruti Sharma from MA. Please go ahead. Ms. Shruti, can you hear us?
Hello, am I audible?
Yes, you are now.
Yeah. Thank you, sir, for taking my question. So first question what I have is, what I understand, Lucknow is primarily an unlisted player market. So how are we positioning ourselves in that market? What competitive edge do we have? And how are we performing vis-a-vis other large players in the Lucknow market?
So as far as the customer is concerned, he doesn't really look at whether who he's buying from is listed or unlisted. He just looks at whether the product is good, whether the price suits him, whether the amenities are what he's looking at, how far it is from his place of work. the location. He will also look at what the track record of the developer is. It so happens that Eldeco is one of the oldest players in Lucknow, so we have a very strong track record to show. I mean, I lost count, but I think the number of completed projects is more than 100 in Lucknow itself. It happens to be that we are also listed. So there's a lot of respect in the local market for the brand name, and we have earned it the hard way over the last 20-30 years. So I think in terms of trust and competition and the image that a listed player would like to project, we already have that. And we would not like to do anything which kind of attracts a bad name for us. If we were to go to a new market, say if we were to go to Bangalore tomorrow and we were to say, hey, we are a listed player, so we have a certain level of governance, the local market would take it as a sense of comfort. I don't think it is any additional comfort in Lucknow because they already know us for the last 30 years. As far as competition is concerned, it is from mostly local players. You are very right. There are, I don't think there's, other than DLS, there's no listed national player who is active now. I'm aware that some of them are looking for land parcels, but as we have been discussing in the previous con calls, it's very difficult to acquire land in Lucknow of a sizable nature. So we've been successful in doing that in the last 3 or 4 quarters. Our competition is with the local players. Some of them, I have to say, are pretty good. They do a decent job. And just like any other market, the best player wins in that. But having said that, the overall supply, I think, is half of what the demand is, or even less of what the demand is. So there's enough room for everybody, and even national players if they wanted to enter Lucknow. I mean, it's not going to take away our sales numbers if 3 more players enter Lucknow because the market is so big.
Okay, sir. So second question what I have is that what I understand, we are primarily a Lucknow real estate player, right? So do we have any, I mean, I understand we have enough, potential for growth in Lucknow as well, but do we have any plans to expand into other geographies, maybe taking a land parcel or through EPC or something?
No, not at the moment. We are focused on the Lucknow market. We feel that it is poised at the exact same place that maybe what Pune was 20 years ago. And so 20 years ago, there used to be 4 metropolitan cities in the country. Now there are 7 or 8. And as we speak, I think there are another 10 or 15 which are really growing very well. So I think Lucknow is one of those. It would be a mistake to get diluted by diluting our attention from Lucknow at the moment. And we have been able to tie up very good projects. We are going to focus on their execution over the next couple of years and maybe expand even more.
Okay, sir. And sir, in Lucknow, will we look for like government EPC projects or something which is into the...
No, Shruti, we are not a EPC player.
Okay, sir. Sir, that's all I have. Thank you so much for answering my questions.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Karan Premchand Gupta from Cavi Capital. Please go ahead.
Yeah, thanks. Can you hear me?
Yes.
Okay, great. So about a year and a half ago, you spoke about difficulties in collecting land parcel, which you partially discussed in response to a previous question. But there were also issues in getting permissions and project approval. So can you just talk about that, given that you expect to continue to launch projects over the next couple of years?
Yeah, so the business development issue we have kind of resolved as we have disclosed in our presentation which we have uploaded. So we seem to have enough inventory and we are adding some more. So we can only disclose that once we get under control. And even approvals, they seem to have simplified a little bit. Of course, I would like it to be much faster than it takes right now. So it used to take about 12 months. It is down to 9 months probably. From the time we are ready for our application, it takes about 3-4 months for local approvals. It takes a couple of months for environment clearance, and then it takes a couple of months for RERA registration. So would have liked it very much if the whole process could have happened parallelly and we would have got approval in 3 to 4 months, but don't happen anywhere in the country. But it's much more predictable. It's not that you're going to be stuck for 3 years. So 6 to 9 months is what it takes.
Okay. Great. And also, next question on margins. Earlier, like the company's always had great EBITDA margins, but you discussed in a previous conference call that, you expect margins to go down a little bit to about 30-35% at the EBITDA level. But in a response to a previous question today, you said that 40-45% is what you're currently looking at. So how should we think about margins?
Yeah, because something has changed. If you look at the presentation carefully, the number which has moved is average realization. Our pricing has gone up big time. So what had come down to 30, 35 is back to 40. So if you look at Imperial 2 margins, I expect them to be very high, which will more than take care of the low margin in Imperial 1. So I was right a year and a half ago about margins coming down to 30-35%. But pricing has increased by about 30%. Costs have not gone up that much. So the margins are back at in the 40% range.
All right. That's all I have. Thank you.
Yeah.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Priyam Podar from Value Equity. Please go ahead.
Thanks for the opportunity. So in the commentary mentioned in the presentation, we have purchased close to 3.4 acres of land, and whereby we are also doing some aggregation. So with this, we have close to 65 acres of land, and probably you are going to, apply approvals for more land shortly. So can we anticipate that whatever aggregation you have been done, so this combined revenues would be north of 600 crores? That's what the numbers we have been mentioned?
Yeah, much more than 600. I already discussed that in one of the previous questions.
Okay. Thanks. And can you share the timeline of the same, if possible?
So I mentioned somewhere that the first approval of 45 acres we are going to be applying. We have not applied even as we speak today. We are finalizing the plan. But in about, say, 10 days' time, we will be submitting them for approvals officially, and then whatever the approval time is. So I guess sometime in the first half of next year, this 45 acres should get launched.
Okay. Thank you. And sir, if you can just give us some direction about the average realization, which has been shaping up well for us. So currently, if we see, we are ranging towards 6,500 mark per square feet against a historical 4,500 mark. So, how do you foresee that in the coming years? Whether we would be maintaining that run rate or there is a scope of appreciation?
On the contrary, 6,500 is largely skewed because of Trinity. Trinity is a high-priced product. The rest of the portfolio is still in the 4,500 range. So going forward, it will be somewhere in the middle of these two numbers. And when I say going forward, I mean say the next year or so. But after that, it could turn higher. But I can't really guess that right now. So 5,500 is what I would be fair to expect, but depends on the mix of project and product which gets sold in that particular quarter. So our plotting product is the plots are in the range of about 4,500-5,000. Group housing is in the range of 6,000, 5,500, 6,500. Trinity is nearly 9,000. So that varies from quarter to quarter. Weighted average over 4 years would be 5,500 to 6,000 maybe. I don't know.
Okay. So I think that was helpful. Thank you so much, sir.
Yeah.
Thank you. We have the next question from the line of Yash from ICICI Bank. Please go ahead.
Hello. Good debt level.
Yash, your audio is not very clear. I request you to go off
Hello?
speakerphone. Yash, we are unable to hear you. I request you to please go off the speakerphone and use your handset.
Hello.
Yes, go ahead.
Yeah. So you may explain that you are looking for a debt in coming times. Can you just level something that
I'm sorry, Yash, but your
part
audio
of
is breaking
it
up
is
again.
already?
We are unable to get your question, Yash. I'm sorry.
Hello.
Yes. Request you to continue speaking on your handset.
So can you just throw light on current debt levels and
So, Yash, you're not in network. We cannot hear you. I'm sorry. If you could
Can we come back to Yash, please, and carry on?
Hello.
Yash, your audio is not clear. We'll have to move on to the next question.
Okay.
Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Yes, you're back in the line. Can you go ahead with the question?
Hello. As
Yes.
you mentioned about debt to a previous participant, can you just throw light on the current debt levels which company has and what portion of that is LRD and construction finance?
So current outstanding is about 100 crores. And what's the second part of the question?
What portion of that is for LRD?
Is for?
LRD, lease rental discounting.
We don't have any LRD. We don't have any rental assets.
Okay. Okay.
Yeah.
Yes, can you repeat your question?
No, I already answered this question.
Do you have any further questions, Yash?
No. Thank you.
Thank you. We have the next question from the line of Manan Patel from an individual investor. Please go ahead.
Thank you for the opportunity. And congratulations for a good launch and sales. Sir, my first question is, so apart from Trinity, I understand it's Q realization, but apart from Trinity, other sales that have happened, have you seen any increase in realization in last couple of quarters?
Yes, there is about 10% increase per square foot.
Understood. So second question is, in the rest of the year, do we see, are you planning any launches or will it be sustainable sales from the new launches that happened in first 2 quarters?
All that data is there in the presentation. So we have 10 lakh square feet of sustainable sales from projects which are already launched. And then we have 3 projects which are under active approval. We should get approvals quickly. So that's about 7-8 lakh square feet. And then there are 3 projects where the land is under aggregation and we're going to apply for approvals. So that's the majority, which is about 20 lakh square feet. That's the breakup.
Right. No, so the question was, so in your slide 14, you have mentioned 3 projects which are under planning. So are they, as soon as the approvals come, they will be launched in next 2 quarters, or how do we look at it?
Yeah, absolutely. There's no point in holding on to a project once the approvals come.
Okay.
Once the approvals come, we are done with the initial site preparation, etc. We get the RERA approval. We tend to launch immediately after that.
Got it. And sir, last question is, in terms of, so now we would be running at 3, 4, 500 crores of sales yearly. So how do we look at it in terms of our ability to deliver on the construction? Because that will be material scale difference from what we have achieved in the past. So can you throw some light on that?
No, not really. It's not a huge quantum jump. Yes, of course, it's a jump for from where the company is, but there is also a service agreement with the unlisted company, and unlisted company, as you probably know, is a company of a bigger scale, and we provide all the support that is required in terms of contractors and the back end. So we are pretty confident that it's not a scale which will worry us.
Understood. Thanks a lot, sir, and wish you all the best.
Yeah, thank you.
Thank you. I would now like to hand over the conference to the management for closing comments.
Thank you. It was a very engaged kind of conversation. So thank you everybody for your interest, and we look forward to sharing our progress in the next quarter. See you. Stay well.
Thank you. On behalf of Eldeco Housing Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.